Hi, everyone. Thank you so much for joining us this evening. I'm joined with Clover Properties and Rachel Oliver. We're going to be sharing with you the rent to own and the assisted purchase program. My name is Andrew Metcalf, and I'm a mortgage agent with Mortgage Alliance. We cover purchases, refinances, we'll help you with your renewals. We focus on debt consolidation, self-employed borrowers, new to Canada, we will assist with that, home renovations, and investments. Feel free to reach out to us if you have any questions at all with regards to your mortgage needs. Today, we're going to be talking about rent to own. So I'm really curious if you're tired of renting. Are you discouraged by the raising rental costs that we're having? Are you tired of paying your landlord each month, building equity in a home for someone else? Have you been saving for your down payment for many years and your closing costs just to find that you're still short, that you need to save more money because house prices are going up? And the closing costs, right now you have to save about 2% just for your closing costs. Looking at the rental prices in Toronto, it's quite interesting to see that at this point, since January 2020, the Toronto average rent increased to $2,300 for a one-bedroom and $2,900 for a two-bedroom. That again shows that it's really difficult for anyone to be able to save up a down payment when they're paying rent of those amounts. I had a client recently that reached out to our office for us to be able to provide them with a pre-approval and allow them to purchase a home. In looking at their situation, we realized there really was not a lot that we could do at our stage in order to get them a pre-approved for a mortgage. I'm going to give you an example of this particular case. So Jennifer wants to purchase her first home. She's tired of renting and wants to build equity in a home so that she can own it. Jennifer has received money from some family members that passed away, and she has a down payment of $15,000. She has returned back to work after a couple of years of leave of absence due to health concerns. And Jennifer is now making a salary of $90,000 per year. Unfortunately, her credit score is 550 due to health issues, which have been resolved through, unfortunately, having to file a consumer proposal. Jennifer has been renting in Toronto for a couple of years and wants to get a condominium in Bowmanville. She's looking to purchase a two-bedroom unit, which is currently up for sale for about $379,000. Upon applying for her pre-approved mortgage, she was declined due to low credit, her employment not being, she needs to be with her employer for 2 or more years in order to get qualified, and she did not have a sufficient down payment. In the particular condo that she's looking at, she's looked to see if maybe she might have to rent there first, and renting there for a one bedroom would be $1,700. In a two bedroom, it would be $1,850 for her each month to pay rent. Reviewing the property, we recognize that her minimum down payment needs to be $18,995, but she only has $15,000. So she's going to have to save at least another $4,000 just to cover the down payment amount. This will also need to be something that's CMHC insured, so that would add to the price of her home. The total mortgage amount that she would need would be $375,000, but her mortgage monthly payment would be $1,570 instead of the $2,300 that she's paying in Toronto for rent. Her property taxes are about $185, heating, and the condo fees at $310. Bring her total monthly payment to about $2,100. So she can own a property in Bowmanville. It would actually be something that she owns. She'd be paying less than she's paying in rent in Toronto, and it would allow her to then start building equity in her home. As you can see, the income required for her would be just around the amount that she's making, which is about $90,000. Currently, what's helping her is that the interest rates are really low. Right now, the interest rate is 1.89 on a 5-year fixed. So that's an excellent promotion rate that we can provide. With the uninsured rate, she'd be looking at about 2.19 at this point. And this provides her with the ability that she she could qualify, but she's missing a couple components. That's where we reached out to the Clover Properties team to see if they could assist us, and I've asked them to come on to share with you all how their program will help buyers get into a home and stop renting. I want to just introduce you to Rachel Oliver and Clover Properties. Clover Properties is a family-run company, and they've been open since 2009. They've helped hundreds of Ontario families get on the path to homeownership. With their flexible rent-to-own program, which is customized to help homeowners become mortgage-ready, while enjoying living in the home that they've selected. Thank you, Rachel, for joining us. If you could just continue and maybe educate us on the rent-to-own program and your assisted purchase program. Thank you.
Yes, thank you so much, Andrew. I really am grateful that we're able to do this on a Facebook Live. I love technology, and I love getting this information out to home buyers that are aspiring to get into home ownership. And I also prepared some slides that I will walk everyone through. But I also want to point out that we're going to be giving away a copy of the book that I have co-authored with my husband and business partner, and it's called The Rent-to-Own Essential Guide for Home Buyers. So we will be actually giving this book away to, I guess, the people that are posting comments. So go ahead, post your comments, post your questions, and Andrew will be picking a winner. And you're going to be getting a hard copy. In a world of digital media, very rarely do we come across actual paperback copies of books. So today is your chance to get your hands on an actual physical book. So Andrew, we're going to be watching those comments and questions, and hopefully we'll be able to pick a winner by the end of this presentation. So as Andrew was pointing out, you know, a lot of people right now are in the same boat. They're saving for a down payment, and they have things that are working against them because life happens. Some people have student loans, so saving up for a down payment and navigating student debt is challenging. Sometimes people have business loans if they're self-employed, and of course there's the car loan. A lot of people are jumping into car loans these days because I guess during COVID there's a lot of incentives at the car dealerships. And guess what? When you take on a car loan, you're first of all, you might be dipping into your down payment savings, or worse, it's going to eat up your borrowing capacity. So we're finding that a lot of people are kind of in these three categories with what the challenges are. But on the flip side, we're noticing that a lot of home buyers, kind of like Jennifer, are worried about the affordability factor because the real estate values continue to climb. And a lot of people are trying to jump into home ownership, and a lot of people that own properties aren't selling because they're just not sure where they're going to go. So it's creating a little bit of stress. And no wonder. I love this article. It came out back in March of 2020, just as we kind of entered this whole COVID uncertainty. And that's when the banks really kind of cut their interest rates. And the Bank of Canada rate cut over the coronavirus basically suggested that Toronto home prices will actually go higher as a result. And what's interesting, if you kind of fast forward into where we are in July and August statistics, and I think you alluded to this, the Durham region real estate market is up by 17% since last July. And if we look at what the average price is for a home right now, it's hovering at around $752,000. And guess what? That's up by 3.5% since June 2020. So the need to get into home ownership is fierce, and that's driving up the competition because there's less inventory. Buyers are sellers are holding onto their properties, but buyers want to get in because they want to take advantage of those interest rates that you're talking about, Andrew. And this is creating a supply and demand issue, and that's going to continue probably for the unforeseen future, because interest rates are going to be staying low while our economy recovers from the effects of COVID. So that's why a lot of people are being impatient. And at the same time, hundreds of thousands of Canadians are getting declined for a mortgage, and we're seeing this, and you're seeing this, but it doesn't have to be that way. You don't have to take no for an answer. If you've been talking to a bank, or if you've been talking to the other mortgage agents and they've said no to you, don't take no for an answer. Andrew can fix that issue. Andrew knows how to get you a yes, and this is where we come in, and this is how we can collaborate and help you through an assisted purchase program that allows you to essentially rent to own a property and get into the market today. How does this work? Well, This is for buyers that have limited down payment and imperfect credit. So Jennifer was that perfect candidate that had that scenario. This is for buyers who want to go and still feel that whole butterfly effect of shopping for a property, walking into that condo or walking into that detached home, and feel those butterflies. And that's how you know that it is your property. So you still get to go house hunting with a real estate agent and pick from what's out there based on your budget. Most buyers, after going through our assisted purchase program, become owners within 36 months. And 36 months flies by so fast, but in that time frame, and this is really crucial, if you take nothing away from what I've been babbling about, know this. Through this assisted purchase program, you actually build equity. So when you're renting, there's no equity to be had. You don't benefit from that, your landlord does. Through our program, you actually build up your credit, you work on becoming mortgage ready, you enjoy living in the home, and you're building up equity at the same time. And this is why this program is so powerful and why so many Ontario families have been doing it with us since 2009. We've been around a long time. I want to draw your attention to a couple that we've recently worked with, a young couple, Erica and Leon, very nice. They're common law, and they want to set down roots. They realize that the market is getting away from them, and they're going to be outpriced very, very soon. So they came to us saying, hey, we need some help. And this is a deal that we're doing right now, so I really want to share this with you. Erica is an early education teacher, so she is just starting out on her career path. And Leon is a little bit more established. He is actually a water systems specialist, and he does project management for municipalities across Canada and the US and helping them install various filtration systems. So he has a very substantial, significant income. Combined, they have a household income of about $150,000. And they decided that they want to set down roots in the Durham market, specifically in Ajax. And they found a great little starter home. And that's what this is about. This is about getting your foot in the door, getting in with a starter home as soon as you can, start building up that equity, improve your credit situation so that you can then ultimately qualify for financing without missing out on that equity while you're fixing your credit. And the reason these guys can't really qualify with the banks is because they do not have a strong enough down payment, first of all. Leon has gone through a bit of a previous relationship breakup, which left him with some credit issues. Because sometimes when people separate from their partner, they take on a little bit of the relationship debt as they sort through whose debt it is, and nobody's paying it. Well, anyways, it dings your credit. And that was Leon's situation. So he has to fix a few credit blemishes. Erica, on the other hand, she didn't bother using credit cards. She basically incurred some student debt, but she liked to pay things through her debit and through cash and never really thought about owning credit cards. So she doesn't have any payment history, and she needs our program in order to establish some payment history. And then Leon decided to take advantage of some of these great offers that car dealerships are offering, and he actually purchased a brand new car. So to add insult to injury, not only is he worrying about the old credit load from his previous relationship, he now has an extra car loan, which is eating into his debt borrowing capacity. So he can't qualify for financing in today's market. But they tried. They went to a bank because they found this amazing little property in Ajax. And as you can see, it's so cute from the outside, but on the inside, it's polished. It's beautiful, move-in ready, updated inside, has a great yard. And these are the types of properties that a lot of families are renting to own through our assisted purchase program. And this property is listed for $538,000 in Ajax. It's a 3-bedroom, move-in ready. So when Leon and Erica went to look at this property, they talked to the bank. And this is kind of the analysis that the bank provided for them on this $538,000 property. Now, their credit situation would have needed to be really good in order for them to secure this opportunity. But they ran into a snag. They didn't have enough cash to close. But this is what the bank was proposing. They would need to have a down payment of about 10%. and they didn't. They had less than that. So that would mean that they would need about $53,800. They would be able to secure an interest rate if they had that down payment at about 2.75, again, taking advantage of terrific low interest rates. And their monthly payment would have been about $2,488. But the cash to close, if everything else was perfect, would have been $63,000. And they didn't have that kind of cash. They're only operating with about $25,000 in savings. So this is where we can contrast what it will look like in terms of the assisted purchase program. So if we go through the assisted purchase program, you'll notice that they will need only about $25,000 to get started. $25,000 is enough for them to get into the $538,000 property. Now, through our program, we enable them to build up a down payment. So they have $25,000 today, but that's not going to be enough for them to qualify for financing at the end of this process. So each month, they are putting $754 back into their pocket, and that's built into their monthly payment. So ultimately, they are building up a down payment in tandem while living in the property and building up equity. And I'll show you just how much equity they're building up. So through our program, they're putting $754 towards the down payment each month, which means that they will accumulate an extra $27,144 over the next 3 years. And in total, they'll come out with a $52,144 down payment. That's what it's going to take for them to qualify for a purchase on this property. So their monthly payments are actually about $3,454, but remember, $754 of that is money going back into their own pocket, which will be used for the down payment when they exit this program. So in contrast, the monthly payments are actually quite on par, because the $3,454 consists of rent and the $754 down payment credit. But here's the fun part. To get into our program, they need only $25,900 in terms of cash to close, which is about $37,000 less than what the banks wanted. And this is why Erica and Leon decided, you know what, we're not going to wait. We feel like we're going to get outpriced if we wait any longer. We're going to put our money to work, and we're going to pursue this assisted purchase program. And that's what they're doing. Now, fast forward 2023, comes time for them to exercise their option to purchase, and they're actually going to qualify for a mortgage. Here's what's going to happen. In 2023, they're going to be exiting at a purchase price of $600,013,947. So we already know that at the end of this process, they're actually going to be paying $613,000 on this property, which basically is annualized appreciation of about 4.5%. Now remember, earlier I was saying that the Durham region is seeing 17% appreciation from 1 year to the next. But these guys are locked in to only 4.5%, which ultimately translates into them having some equity. Now, when we run these forecasts, we anticipate that the market will probably level out. And we anticipate that in reality, between 2021, 2022, and 2023, the market will probably be closer to 8%, and then 6%. So if you kind of look at what's happening in parallel, actual market appreciation in 2023 will lead this property that they're renting to own in Ajax to be worth about $665,174. But through this program, they're buying it for $613,947, which means that they have equity, or in other words, they're buying this property for $51,227 below market value. That's the power of this assisted purchase program. They're putting $51,000 back into their own pocket just by following the plan, just by taking the guidance that we're giving them to become mortgage ready and overcome the barriers that are stopping them from getting a yes from the banks today. And most of our deals, home buyers are seeing anywhere from $25,000 upwards to $60,000 in equity through this process. So it's a very powerful way to get financially ahead and get into home ownership. There are a lot of details to cover, and I don't have the time here to share everything. I'm happy to take some questions, but we do have a book. We published a book called The Rent-to-Own Essential Guide for Home Buyers. It is available on Amazon.ca, and it is a great resource. So if this is something you're just starting to explore, check out the book. It talks about the ins and outs, the pros and cons, the pitfalls, and it gives examples of what the contracts contain, what kind of questions to ask, and who could benefit from something like this. It's a great resource, and it's a great starting point. And we're giving away a copy of this book, and we are going to be picking a winner. So hopefully, Andrew, you're watching, and we can pick a winner and answer some questions in the process. But ultimately, what we want you to know is time is money. Instead of renting, don't waste your money on rent. Move into the ownership game, whether you do it through a bank, whether you do it through the assisted purchase program. Either way, you need to speak to Andrew, and he will be able to guide you and answer some specific questions. So if you want to apply for the assisted purchase program that Clover Properties owns and operates, please contact Andrew. I've listed his email address here. Andrew, maybe we can post that inside of Facebook as well, so that it's easier to copy and paste. But that's it for me. I'm happy to give it over back to you and take some questions.
Thank you so much. It's been a great time spending with you, and I really do appreciate all the information that you've shared with us. There are a couple of people who have asked some questions, so I'm going to go through some of the questions here. First question was, how much money do I need for a down payment for a home?
Great question. So usually about $15,000, $15,000 is a great starting point. And that is the base minimum that we could work with, and we will build you up from there. But again, it really depends on the type of property you're looking for. So properties that are listed, I would say upwards of 400,000, probably closer to a 4% down payment would be required. So 4% of 400,000. So, look at it from that point of view. The more expensive the purchase price, the closer you should be to 4%. 4 or 5% is ideal, and 15,000 will work if you're looking for a purchase on a property that's just a little bit under 400,000.
And the next question was, what if my credit rating is low? Can I still qualify for the rent-to-own program?
Yes, that's exactly who we work with. This program is designed to give you the time and the support that you need to build up your credit without missing out on the market. And this is where Andrew would come in, because Andrew would look at your file and he would be able to determine what kind of support you're going to need while you're renting to own. And he would be checking in on you and providing information that's going to help you accelerate that mortgage preparedness by fixing the credit issues that are holding you back. So absolutely, there is really no minimum credit that we would work with. Even if you've gone through a bankruptcy, even if you've gone through a consumer proposal, even if you have collection items, those are the things that can be fixed, and we as a team will work with you to get you mortgage ready.
Mm-hmm. Thank you. Oh, so someone's asking if the graph and the information will be available, that they could pass that information on to their spouse. And the answer is that you can definitely take a copy of the video that we're sharing online, and it will stay available on Facebook. So you can take that and share that with your spouse. And if you need any further information at all, reach out to me. I'd be happy to share that information with you one-on-one. One of our viewers asked if they can use the first-time home buyer incentive when purchasing the home.
So yes, you can, but you would have to use your first-time home buyer incentive at the end when you're mortgage ready, because the incentive really applies to people who are qualifying with the banks. You still need to meet the mortgage lender criteria in order to be able to get access to those additional programs. So once you are mortgage ready through our program on the back end, absolutely, you have all those programs you can access, and you can even tap into RSPs. There's different ways, but you have to have great credit in order to qualify. So our program will get you there.
If someone has gone in and chosen a 3-year term, and 2 years from now they'd like to purchase the home and not continue with the 3-year term, is that an option?
Absolutely. So we do not penalize you for exiting early. In fact, we really encourage it. So if you're ahead of the game and you are ready to exit into ownership a little bit sooner, that's totally fine. We are families trying to help other families. We're not an institution. We're not a bank. We're willing to work with you to make it work faster for you, or sometimes an extension is even needed. So yes, absolutely, we would definitely assist in getting you out of the deal earlier.
Okay, and are there any penalties for that at all?
So we do not inflict any penalties, but there is one consideration. There is a mortgage on that property, and another family has essentially stepped forward to say, I'll take on a mortgage to help Erica and Leon or Jennifer go through your program. So that family is tied to some financing. And if their financing has a penalty for them to get out of it early, that penalty would be passed on to you. And oftentimes, it's hard to predict what that penalty would be, but Andrew, if it's a fixed rate, the penalty would be one thing. If it's a variable rate, it's a totally different penalty. So that's why it's difficult to say exactly what it would look like. But the penalty is not from us. The penalty is actually from the lender side to terminate that mortgage early, and it's just directly passed on. So I hate calling it a penalty because that's not what we're doing. It's more of the cost of breaking the financing that's in place on that property.
Yeah. And also, could you share with us a little bit about Clover Properties?
Yeah, absolutely. So my husband and I, about, I would say in about 2009, we decided that we wanted to own investment properties. And when we started looking around at the different possibilities, we were a little bit discouraged by the profile of the renters. They weren't looking after the properties. Some of them seemed like they might not want to pay on time. And that really scared me. I thought, what, if I'm going to buy an investment property, I really want it to be a little bit more purposeful than that. And our real estate agent at the time said, hey, you know what, there's a family that they have just, the wife had just gone through cancer and she was recovering, and they had 4 children and they were renting, and they were declined for a mortgage because the wife was not working due to recuperating from cancer. So a real estate agent said, hey, have you ever considered helping a family rent to own? So we didn't know anything about it. And of course, we started furiously doing the research, and we found out that it's been around a long time in the US. It was actually quite common, but a lot of people didn't really know much about it and how it worked. And there were a lot of pitfalls if it wasn't done right. So my husband and I researched this thing to death. And finally we said, yes, we're going to help this family, because we were able to qualify for a mortgage, and we lent our good credit, and we had the down payment funds. And ultimately this family could qualify for a certain price point, and we were able to support that. So we got a mortgage, and they would rent to own from us. And it was going to be a 4-year deal in order to get them to a place where she would be recovered. She would have time to go back to work. Her income would be where it needed to be. And of course, their credit would rehabilitate from having gone through this major personal setback. And that's exactly what we did. And following that, we were able to help 3 more families. And then we tapped out. We couldn't get any more mortgages. Financing rules, got the best of us. But our phone kept ringing. Home buyers heard about what we were doing, and they wanted help. So that's when we called our friends and family and said, hey, can you take a mortgage? And that's where we got this whole idea of families helping families, because it really is a family-based business. And to this day, we have over 150 families that are part of our network that want to help families get into home ownership based on what we started in 2009. I know it's a bit of a long-winded way of explaining how we got into this, but we've helped about 400 families across Ontario.
Great. Thank you so much. And I guess let me just check if there's another question here. No, just lots of positive comments. Everything. People are saying that this has been very informative, very helpful, and they're very thankful for the time that you've spent with us. So thank you so much for joining us this evening, and thank you everyone for viewing and hearing what we're sharing. And if you have any questions at all, feel free to reach out to me. Like Rachel said, the goal here is for us to build an action plan for you. So as a mortgage agent, my goal will be to understand your situation, really sit down with you and get it. And once I understand your situation, for me to be able to help you build an action plan where you can be doing a rent-to-own program for maybe the next 3 years or 4 years. And throughout that process, we'll work hand in hand to build your credit, to put you back into a situation where you can get on your feet and get into home ownership and own that home yourself. This will allow you to build equity, so it's an excellent opportunity for you. Thank you so much to everyone who's joined us this evening. Have a great evening.
Thank
Bye.
you. Good night.